What's going on, guys? This is Chandler Smith, and in this video, I'm gonna show you what the cash-on-cash return is in real estate and how to be able to find it. And if you stick around to the end of the video, I'm gonna show you what kind of a cash-on-cash return you should be looking for before you purchase a piece of real estate. So with all of that being said, let's jump into it. All right, guys, if you clicked on this video, it's because you want to know how to calculate the cash-on-cash return, what it even is, and how to understand it and use it. And so I'm going to explain all of that in this video. All that I ask you to do is smash that like button and subscribe to the channel and hit the little bell so you can catch my future videos where my goal is to help you to build a huge passive income. Let's just jump right into it. First off, you need to understand that there are a couple different ways, or I guess metrics, you could say, of evaluating a property or analyzing a property. And so you've heard of a cap rate or a cash-on-cash return or an IRR. All of these things are used to determine whether a property is worth purchasing. And when they start spitting out these terms, a lot of times I know it can be overwhelming. So I'm gonna break them down simply for you and help you understand why I truly believe that the cash-on-cash return is the best metric. So first off, a cap rate doesn't take into account a loan when determining what your end return will be. So I don't like that, because when I purchase real estate, I like to use leverage or use a loan to purchase it so that I'm not buying it all in cash. When you look at an IRR, it takes into account a bunch of future value stuff, and it's a little bit more complicated. And so for super big properties, it's worth diving into. But in my opinion, for a new investor or even an experienced investor that's investing in 4 units or less, or even 10 units or less, you can use the cash-on-cash return. And I truly believe it is the best number to look at to determine if a property is worth purchasing. And so calculating your cash-on-cash return is actually very simple. All you do is take your cash flow and you divide it by your initial investment. That's it. Cash flow divided by your initial investment. Now, I'm sure a lot of you are saying, well, Chandler, what is your cash flow and what is your initial investment? So I'm gonna break each of these down for you. So your initial investment should include all of the cash required to purchase a property and get it running. This is going to include your down payment, this is going to include your closing costs, and this is going to include any renovations or any other expenses on the front end of your property. And this will give you your initial investment number. All right, now let's show you how to calculate cash flow. And cash flow can be really simple, but also really complicated depending on how you look at it. So simply, cash flow is just taking all of your rents in, subtracting your expenses, and cash flow is whatever is left. So for example, if you got $1,000 in rents, and then you paid $500 in a mortgage, and then another $200 in all of your expenses, you're left with $300. That's your cash flow. So to find your cash flow for the year, you're just gonna multiply that by 12, and you're left with $3,600 in cash flow. So sounds pretty simple, right? It really is. The hard part is figuring out what your expenses are and what they're going to cost, because you've got to make sure you include your mortgage, you've got to make sure you include taxes, that you include insurance, that you include management, that you include any expenses, capital expenditures, all of these other things you need to make sure are included in your expenses calculation. But as long as you've got that pegged, it's a very simple calculation of rents come in, expenses go out, and you're left with your cash flow. All right, now we're gonna use all of these earlier examples and show you how to calculate the cash-on-cash return to tie everything together. And so you've got a property that's renting for $1,000. You've got $700 in expenses between your mortgage and all those other expenses we talked about. That leaves you with $300 per month in cash flow, or $3,600 per year in cash flow. So your cash flow is $3,600. You're gonna divide that by your initial investment, which was your down payment of $25,000. And we're gonna say there was 2% in closing costs on this $100,000 property. So you're gonna take your $25,000 down payment plus an additional $2,000. That gives you $27,000. And now you're gonna take your $3,600 in cash flow divided by your initial investment of $27,000, and that is going to give you a cash-on-cash return of 13.33%. That's how you calculate a cash on cash return. Now, a lot of you are saying, well, Chandler, we've got it calculated. What does it mean? And this is something that is totally up for interpretation, but I personally will not buy a property unless it has at least a 10% cash on cash return. Now, a lot of people will buy at a 5 or a 6 or a 7 and say that they can make up for it because the property is going to go up in value, and so they're okay with less cash flow. But in my opinion, you should not buy a property unless it is at least a 10% cash on cash return. And so if you follow these rules to calculate your cash on cash return and then buy above a 10% cash on cash return, you are going to have an awesome investment property. Now, if you're doing all of this math in your head, it can get really complicated, especially with all the expenses that you're going to run into with figuring out your loan payment and all this other stuff. And that's why I created an Excel doc and a calculator that is in an app that you can download. And so if you want to download the app to be able to run all of the numbers right on your phone, it's on Android and iOS. You just search CDS Rental Calculator and you're going to be able to download that and quickly run the numbers. You can watch this video to show how the app works, or if you want to use your computer, you can go and download the spreadsheet that also shows you how to run all of the numbers on an investment property. And you can download that for free on my website at www.chandlerdavidsmith.com. Now, both the app and the spreadsheet are completely free, and I created them for you so that you can know how to run the numbers on an investment property and put yourself in a place where you can purchase the perfect property and build a huge passive income for yourself. Now, if you enjoyed the video, make sure you hit the like button, subscribe to the channel, and hit the little bell, and we'll look forward to seeing you in the future videos where my goal is to help you to build a huge passive income. Thanks so much, guys. Have a great day.